Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets and a very beautiful weekend as well. And in today's action, the S&P and the QQQs hitting brand new all-time highs. However, the gains were not as good as they were early this morning. Matter of fact, midway through the day, we started to see some pretty sharp declines on the S&P, on the QQQs, and several major and minor sectors such as healthcare, financials, and consumer discretionary went from green to red. Matter of fact, even the Russell sadly also pivoting from green to red throughout the day. So what exactly happened, guys, to result from some very nice gains early morning to a bit of a slide in the afternoon? Well, of course, we had a little bit of headlines come out, and that was the following headline right here. Fitch Ratings still expects U.S. growth, but downgrades sectors on deterioration concerns. I'll remind you, Fitch actually downgraded the U.S. credit worthiness overall back in 2023 from AAA to AA+, but now they are downgrading certain sectors due to some growth concerns. So, policy risks cloud U.S. credit outlook. 25% of U.S. sector outlooks have been downgraded to deteriorating in 2025. Fitch cites an increasing uncertainty, slowing growth, and higher for longer interest rate expectations, which is just a fancy way of saying, yeah, the tariffs are real and they're coming, and it's possibly going to lead to higher rates for longer and put a bit more pressure on the consumer. However, stating that the recession risk has declined thanks to easing U.S.-China trade tensions. U.S. GDP, though, the forecast increased from Fitch to 1.5% from 1.2%, but stating that momentum is expected to continue slowing throughout the year, which is largely the same sentiment that was echoed by the Federal Reserve when they gave their summary of economic projections just a few weeks back overall. That was the piece of news that came out and kind of soured the gains throughout the day and removed a lot of positivity from the markets late into the close. I'll remind you though, guys, this is nothing new. Fitch has been doing this for months and months and months. Here's another article here. May 9th, Fitch Ratings lowers U.S. restaurant sector outlook. April 8th, Fitch Rating lowers U.S. retail and consumer products. So they downgraded 25% of sectors overall, largely having to do with, of course, the price pressures placed on consumers right now. But nevertheless, they did increase their outlook for GDP. So kind of a mixed report right there. And that was pretty much all of the news that you got today that resulted in a little bit of volatility. So in today's video, guys, we have a few things to take a look at. Number one, we're going to be going through one company earnings, which is going to be Domino's Pizza. Get some insights into how they're dealing with these price pressures that the consumer is facing right now. How are their consumers doing? Should be a fairly interesting report to go through. And then I hope you guys are ready for a massive earnings week, the start of 3 back-to-back very busy earnings weeks overall. Tomorrow, all of the defense, well, not all of them, but most of your large defense contractors, Lockheed Martin, RTX, and Northrop Grumman, those are going to be reporting tomorrow. Philip Morris, Coca-Cola, of course. Thereafter, the big day, of course, on Wednesday, Tesla and Google. We're going to see what they have to say. And shout out to other names as well, such as Fiserv and Chipotle. Going to be curious to see what they have to say on their earnings reports. But all in all, very, very busy week of earnings. And then next week, of course, we get a lot more big tech names. So hopefully you guys are ready and prepared for that. So first thing we'll do is take a look at Domino's Pizza earnings. Thereafter, we will get into our normal technical analysis rundown of all our major market indexes, check on the rotation, see which sectors are performing better than others. Thereafter, we'll do the same thing. We'll go through our big tech name list right here, see which trades are set up very nicely for some possible swing trades or some additions to the long-term portfolio prior to their own respective earnings releases. And then, of course, at the end of the video, guys, I'll take you through the biggest gainers and losers of the day. Opendoor, the brand new meme stock. This stock has not seen the light of day for the past, arguably, 2-3 years since 2021, and now being picked up by many people on Reddit and Wall Street Bets. So we'll go through some of the biggest gainers of the day, see what we have there, some of the biggest losers of the day, and see if we can kind of scout out some swing trade opportunities for you guys. And to wrap it all off, I will show you guys some of the trades that I made today in our portfolio and which positions, of course, I'm keeping into the rest of the week. So without further ado, should be a very fun video. Let's jump right into it, shall we? The SPY up 0.2, the QQQs up 0.52, but as I said, the late afternoon declines did contribute to losing some of those gains. The S&P at one point today was up almost 0.5%, 0.6, and the Qs closer to 0.8, 0.9%. Taking a look at the rotation right here, you can clearly see again It's been the big tech show. Now, this morning, this entire heat map was almost green, but sadly, to the end of the day, we did forfeit a lot of those gains. So big tech not looking too bad. Microsoft flat, NVIDIA down very small. Tesla has earnings on Wednesday, of course. Banks and financials slightly mixed. Healthcare as well. Slightly mixed, as you can see here too. And the bottom half of the market, namely industrials, taking a big hit here today. But some of the more interest rate sensitive sectors did perform well because we did see some declines on the 10 and 20-year yields today. So overall, right, very mixed market today. One day relative will show you how mixed it actually was. Communication services, which, let's be honest, was led by Google and Meta for the most part. They did very well. Basic materials, cyclicals, real estate utilities performing decently. To the downside, energy, industrials, and good old healthcare just cannot catch a bid. 1 week relative, the market still remains fairly mixed, although we are at the all-time highs. Some sectors perform better than others, technology being your biggest leader, and to the downside, healthcare and energy kind of dragging along the bottom there. So before we get into more technical analysis, guys, let us dive right into our first earnings and only earnings of the day, which is going to be Domino's Pizza. So Domino's Pizza came out with earnings this morning. Matter of fact, they actually jumped a whole 6% before giving back all of the gains and ending in the red. It was a fairly mixed report in terms of the numbers. As you can see down here, they did miss on EPS and missed on revenue. However, they did say that their pricing strategy was working and that consumers were proving to be very resilient. That was the highlight of the earnings call overall. Let's take a look at some of the numbers and then we'll go through the valuation, shall we? So Domino's Pizza wants to steal market share as it wins over low-income diners. I'll remind you, Domino's Pizza is a new addition to the Berkshire Hathaway portfolio. Here's Uncle Warren's portfolio. You'll see that he has a 7.7% stake in Domino's Pizza. Position was started last year and has been built up over the past 6 months. They own a 7.7% stake in the company. Obviously, it's a small fraction of his overall portfolio, but he does have skin in the game as one of his more recent purchases. Let's move on to the article, shall we? So, in terms of DPZ, here's what the CEO had to say. I think the industry headwinds are actually tailwinds for us, meaning, of course, they're headwinds, but we're going to take market share, gain market share during this time frame. Of course, guys, the headwinds, everybody knows what it is, right? Price increases, pressure on wages for most people, a lot of people opting to eat at home rather than eat outdoors. Moving on further, the second quarter U.S. same-store sales growth of 3.4% topped estimates of the 2% from Wall Street, which was very good. Also provided to a nice little bump this morning in the pre-market session. Executives said that Domino's grew sales across all income cohorts, including low-income customers, bucking the industry trend. Here's what he had to say further. We're able to lean into value in the things that people want value on. The reason it's the best deal ever is because everybody else right now is giving you a deal on something you don't want, something that may be your second choice. This is something that Domino's said last quarter. And when they were asked what they're going to do to address a slightly weakened consumer, a consumer that's seeking more and more value, they said, you know what? We're just going to give people exactly what they want. We're going to give pizza. We're going to give deals on pizza, not necessarily secondary items. No, we're going to focus on promotions and discounts on the bigger things on our menu. While fast food chains typically see consumers trade down to their cheaper meals during times of economic hardship, diners faced with years of high inflation have been opting to eat at home or spend on what they really think is worth their dollars. This is something systemic, said the CEO. Until people's wages get back to the point where they're outgrowing pricing, this is going to stay. I think that's why you're seeing what you're seeing with Chili's. But that's what you're going to see, the positive stuff that you're seeing in Domino's. So he is referencing Chili's, saying that Chili's for the past 3-4 quarters have been really leaning into promotions, trying to provide as much value as possible to the consumer. And Domino's is trying to do the same. He's talking about wages outpacing inflation and outpacing the rise of pricing. We touched upon this, guys, when we went over the CPI numbers that came out a few weeks ago. Here's your average hourly earnings, 3.7%. You can see that restaurant meals are above that rate. As a result, unless consumers see true value or until they feel more wealthy, that they can get more for their dollar, they're very hesitant to go out to spend on restaurant meals. So Domino's is trying to lean into promotions to kind of address those concerns. Moving on further, we'll lose on occasion, but not to a competitor, but to an eating at home occasion. So that is the crux of the argument for Domino's Pizza. They're trying to take away market share with their promotions and with their pricing scheme. It seems to be working for them because they did grow, as they said, income across all, or they did grow revenues across all income cohorts. Here you can see global retail sales growth, 5.6%, 3.4% in the US and 2.4% international, which was very good. Further comments from the CEO include, with what we believe are best-in-class unit economics, the largest advertising budget, a robust supply chain, and a rewards program that is bigger than ever, our business is well positioned. We've never had more tools to drive long-term value creation for our franchisees and our shareholders. Very nice comments from him. In the earnings call, we had further insights into the consumer. It's really important to know that order count growth is much more correlated to profit growth than ticket growth. Talking about the fact that they want to stimulate more top-line revenue growth, more orders, rather so than being concerned about increasing prices to lead to revenue growth, which is the good strategy to adopt, in my humble opinion. Now, we try to make sure that when we increase prices, they are at or below consumer income growth. If consumers aren't getting a raise, then they don't want you to increase prices, of course. Once again, referencing this inflation, this personal earnings growth versus the pricing growth of eat away, or rather, eating at restaurants or whatnot. So very, very good pricing strategy from Domino's Pizza, understanding the current landscape and trying to, if they do increase prices, they're increasing prices lower than the rate at which companies are increasing consumer wages. So very smart strategy from them. Nothing bad to say overall in the report, guys. Just, of course, a stock and a company that is kind of in the, well, let's just say unfavorable segment of the market. We know that consumer discretionary stocks, whether it be restaurants or whether it be apparel brands, have been struggling in the last 2-3 years with the inflation pressures, of course, which stemmed from COVID and are now trying to normalize a little bit. So a lot of these companies have been resorting to promotional offers. You need to look no further, such as companies like McDonald's or Wendy's, or a lot of other restaurants that are using promotional incentives to keep revenues high. And Domino's Pizza is just the same. However, they are fairly aggressive on that pricing, trying to steal market share. So that is something that you do love to see if you're a Domino's Pizza shareholder. Now, talking about the economics of the business, well, in terms of revenue and EPS, they're actually doing quite well. In terms of the expansion, you can see here that they did have a bit of a rough patch, right, after 2021 booms, 2022, but they were able to kind of right the business and attack the promotional campaigns with force. And now you can see EPS will be up and to the right for the next couple of years, and revenue as well, also up and to the right. Now, it's not a company that grows top-line revenue or EPS as much as a tech company, but these are pretty good numbers for a quick service restaurant brand, right? So if you take a look right here at 464, is it a good buy? That's what everybody wants to know, right? So if you take a look at the forward price earnings at 463, we're sitting at a 26.12, which is average for Domino's Pizza. It's not cheap, but it's also not expensive. It's right in line with the company's historical average. And a price to sales ratio of 3.2 is also somewhat average, in line with companies' historical values. Free cash yield of 3.6% is also pretty decent. The company does make a decent amount of money, guys. I mean, you're talking about net margins anywhere between 11 to 13%, depending on the quarter. And in terms of their balance sheet, there's really no problem with their balance sheet overall. I mean, it is a franchise business. They do take in a lot of debt to grow their store count. But overall, although the balance sheet is not something like you'd see at Microsoft, it's not all that bad. The company still makes a decent amount of free cash flow. They're not over leveraged. So all in all, Domino's Pizza can be a very decent bet if this is the type of company that you want. Just pay attention to some of these support levels. Yeah, if we're trying to buy some dips on DPZ, 430 down to about 395 has been an area that I've talked about for many quarters in a row. As a matter of fact, since last year, as a decent zone of accumulation. The valuation is not too bad. If it's the type of company that you like, well, maybe you can follow Warren Buffett into this trade as well, since most of his position was indeed built at these similar lows. I think Domino's Pizza is a company that will stand the test of time. Very strong international brand. may not be your favorite venue, but the fundamentals of the business are quite strong, and I think they will dominate the segment in which they operate. So that's everything that I had for you guys for Domino's Pizza. Now let's start jumping into some charts, shall we? So if we want to take a look at the SPY first, what are we dealing with right now, guys? Well, a very casual daily uptrend. Not looking too bad. We have not even lost this 12 EMA more than once. This was the Iran-Israel situation. We have not really lost this at all since the tariff lows. It's been a beautiful uptrend right now. Daily uptrend continues, and any push lower, looking for a higher low. Anything above this guy right there, call it 618, looking for a daily higher low for possible further trend continuation. And as I always give you guys the context, right? If you unwind this move and go into a daily downtrend, that will just be very healthy weekly consolidation. Bulls having a ton of space right now. Anything above 592, guys, looking for a bit of weekly consolidation for possible further trend appreciation. The long-term weekly bulls are in full control of this chart. We know that we do have bullish seasonality for the month of July. And additionally, the earnings so far have been quite good. We heard from the banks last week. We heard from American Express. We heard from a few semiconductor companies as well. The AI trade demand is still good. From the banks, we heard that consumers are still resilient. They are not over leveraged in terms of credit metrics. The banks themselves are well capitalized. So far, so good for this earnings season. We'll get to hear a lot more about earnings over the course of this week as well, especially some of these very juicy big tech earnings come the Wednesday session. Before we jump into the Qs, though, I want to take a look at some of the momentum indicators because we know that currently we are oscillating between greed and extreme greed depending on the day. So we want to know, is this market very extended? How is momentum? Percentage of stocks above their 20-day EMAs. We can clearly see that although the SPY is at the all-time highs, for the past week or two, you've been noticing a common theme, right? Big tech has been holding up a lot of the market, and the bottom half of the market hasn't really been doing too much. As a result, your overall market breadth, percentage of stocks above their 20-day EMAs, has been curling to the downside. This is both, it's a double-edged sword, right? It can mean that rotation can come back into the market, and in the event that big tech needs to take a breather, there's a lot of room here for all the other sectors to kind of participate. Only 55% of all stocks are above their 20-day EMAs, so we are not overbought in terms of the broad market. So the rotation right now is still healthy. Percentage of stocks above their 50-day EMA, that as well has been curling down. Despite the fact that the SPY and QQQs have been pushing new all-time highs, you got a little bit of room here for some expansion, right? Only 64% of all stocks, and we know that usually when the market tends to get in the most overbought conditions, this ratio right here can run into the high 70s, dare I say 80s, and this is a chart that stems back all the way to 2002. This one is the best one of them all, though. Percentage of stocks above their 200-day EMA. Only 52% of all stocks are currently above their 200-day EMAs. So if you guys are thinking that the markets are overbought all across the board, I beg you to reconsider. This 2021 market was extremely overbought. You can also argue that a lot of sectors, guys, some sectors such as healthcare and a lot of consumer-facing sectors have arguably been in a recessionary environment for the past 2-3 years. The past 2-3 years have been all about semiconductors, the AI trade, tech has been front and center, but where are the consumer discretionary stocks? Where are the consumer staple stocks? Where's that whole aspect of the market? And even healthcare, guys, right? 2023 and 2024, the breadth was not amazing. And the breadth on the percentage of stocks above their 200-day EMA is also not amazing. We still have a lot of room for some broad market rotation. So keep that in mind. Even if the tech trade starts to slow down a little bit, which I would be surprised if it did, but even if it did, guys, there's a lot of room to have some rotation in several segments of the market that just have not been performing well over the course of the past 2-3 years for XYZ reason, namely in terms of inflation, interest rates higher for longer, and now, of course, with the tariffs. So keep all that in mind when you're gauging whether or not the broad market is overvalued. It actually is not. It's just some sectors, some components of the market are right now. One of those right now is the QQQs, right? So QQQs have been flying. Daily uptrend is very clean right now. Any move lower looking for a higher low. Anything above 550 looking for a higher low for possible further trend continuation, right? When I read comments and whatnot, I hear a lot of people trying to short this market, etc., etc. Why don't you just let the bulls tell you when they're actually done, yeah? And that would come with a loss of the 12 EMA right here and a loss of the daily uptrend, right? You need to have some confirmation before entering that position. All of you guys are the same type of people that say, well, I'm not buying a falling knife. If you're shorting the market here, you're basically selling a rising knife. I don't know if that makes sense, but you guys know what you guys get what I'm trying to say, right? Anyways, daily bulls in full control, weekly bulls also in full control. Weekly time frame looks gorgeous right now. Higher lows are set 523. So even if you do unwind here, right, a lot of support below, and the weekly bulls are in control. Support stays planted, 537 down to 524. Moving on to XLF financials right now. Financials had a beautiful morning, but they gave it all back. Look at this move into the end of the day. Sadly for financials, not able to keep it up, but the bull's still looking healthy, right? This was a daily downtrend. You got a nice engulfing move, 100% of your most recent leg of selling. They can set up for a possible new daily uptrend. And all things considered, guys, we have a very nice area of support below 52 down to 50.3. Prior all-time high area of resistance. It will now be support for the bulls. We are still hunting for a weekly higher low. More than likely, it's been established last week, but any consolidation, still looking for that higher low for possible further trend continuation. Banks had good earnings. American Express had very good earnings too. So we'll keep an eye on whether or not Visa and MasterCard can also have some very good earnings. Not to mention also some of the fintech players. We got one coming up, guys, on the Wednesday session, Fiserv, but we're also going to get to hear from PayPal and other fintech players in the space. Moving on to financials right now, our healthcare rather. Healthcare down another 0.57%. So unfortunately, still trapped in this kind of awkward range of consolidation. However, the cleanest time frame, in my opinion, guys, is the monthly. It is a monthly downtrend. We are still waiting for the ever elusive monthly upswing right here. Where are we though? We're in the context of very large support, 136 down to 122. Like I was saying, guys, this is a sector that has not really participated. Well, I mean, you can argue maybe briefly, right? But really, it has not participated in market gains, not like it did back here, right? In how long now? 4 years. 4 years without healthcare. Now, a lot of that has to do with some of the health insurance players getting absolutely killed over the course of this year, but pharma, even pharma has not been doing too well. That being said, guys, we're still looking out for the infamous bottoming out process. Very, very, very wide range right here. You'd be a bit nervous, though, if they cut the lows 129. That would indicate that we are indeed going for a bit more downside, and that sadly the monthly lows are just not found yet. Now, the way that I'm playing this, guys, is just accumulating. I like to play the XLV rather than going for individual healthcare names. I like to play the entire sector. The entire sector has been deeply, deeply lagging behind the S&P. Look at this, right? Usually these divergences do not last for 4 or 5 months. The sector usually moves in tandem with the SPY. This is one of the longest divergences that I've seen in a while. So I am a buyer of the XLV down here. It's just you might need to be a little bit patient for that trade to come around since we're doing this on a monthly time frame, right? Moving on to SMH right now. SMH up 0.07%, but the bulls might be getting a little bit tired, right? However, they are still in full control of this chart. It is clear as day, yeah? Daily higher lows are set right now at 283.63. In the event you unwind without any new highs, that would be your first daily downtrend. That would be a clean-cut loss of the 12 EMA, something that has not really happened since the tariff lows. And then you can say, okay, maybe we're going for a bit of weekly consolidation. Is that such a bad thing? No, the bulls have an incredible amount of space. First touch right here would be around 274, and the larger area of support is 260 down to 250. Look at all this space that semiconductor bulls have created for us right now. So any weekly pullback could just be a very nice buy the dip opportunity, whether you are trying to play the ETF or whether you're trying to play individual names, because some of the individual names have, of course, ran a ton since the bottom. On to the Russell right now. The Russell down about 0.4%, just sideways consolidation on the Russell. Pay attention to this guy, though, 216.88. In the event you come back down and give it all away, that's a daily downtrend, and unfortunately, you will be going into more weekly consolidation. The Russell has been trapped now for a couple weeks in a row, trapped between overhead resistance 231 to 225 and below support roughly 217 down to 208. So the Russell bulls are still in control of this weekly. Got a lot of space to work with here. Maybe a retest of support could be a next area in which we can build some positions. That's everything for our overall market view. Take a look at the minor sectors real quick. Well, once again, XLP staying planted. This is still a bull flag, And as I was saying, guys, I mean, consumer staples, even consumer staples haven't really done anything for a year, right? So we still need some rotation into this sector. Maybe it comes at a later point in the year. Maybe it comes after this earnings cycle if companies can reiterate the fact that consumers are healthy and that maybe their sales pipelines have normalized. We'll take a look at that as we move into the earnings season, of course, but not too bad of an area, guys, to be building, accumulating some positions right here for the possible eventual rally. Utilities, that was one that was also in a similar bull flag above support, which was 80 down to about 78.5. very nice sector breakout on utilities right now. If you're buying this one here, you are a little bit late. Maybe you're going to wait for a higher low, which could come down into here to 81.75 for just further progression, looking very good. But utilities too, right? A year of nothingness. Now finally starting to participate a little bit. And lastly, real estate. Real estate almost with the same setup, right? These charts kind of all look the same. Real estate as well. What has real estate done, guys, in the last 3 years? A whole lot of nothing, because rates have been high, but now that we're embarking into a rate cutting cycle, not looking too bad. You might be able to see some expansion, whether you want to play names such as Vici, which is one in my long-term portfolio, which additionally has done nothing for 3 years other than pay a very nice dividend, right? Whether you want to play names like this, whether you want to play names like Rocket Mortgage, which had a beautiful day today, looking for some possible expansion, right? Or whether you want to play names like the home builders, which are also trying to show some signs of life, trying to go for the weekly uptrends, trying to go for the monthly turning of the corner, the rounding of the bend after being down for what, 9-10 months in a row. Real estate, not a bad bet, but this one as well, right? You have to have a longer duration time frame. It's not tech. You're playing an entire cycle of rate cuts, which will be coming all the way through next year. So that's everything for your minor components. The VIX still doing absolutely nothing, guys. Still stuck at the lows right here. So I'll remind you, if we do get a volatility catalyst, I don't know what it's going to be. Maybe it's going to be war headlines. Maybe it's going to be tariff headlines. Nobody knows what the next catalyst for the VIX is, right? If it does happen, phenomenal opportunity that'll result in some SPY and QQQ declines. As a result, I am a buyer of those declines. And if the VIX comes down into the 20s, that'll be some juicy opportunities to be selling some puts into the market. Right now, though, when the VIX is low, now's a time where you want to build a shopping list of companies that have been left behind, right? Many companies have been left behind so far. And when options are cheap, that's usually when you want to load some leap calls with like a year and a half, 2 years of time on some names that you might like. The dollar is still doing absolutely nothing, a little bit weaker today, but we know the dollar has been weak as of late. Of course, right? Almost this entire year. What you need to see on the dollar is a clear recapture of the weekly uptrend, and then resistance above would be 100 to about 102. If you continue breaking down, guys, well, the logical area would be roughly 95. This is going to be a tailwind for a lot of companies that have earnings internationally. So pay attention to that this quarter. Names like Visa, names like MasterCard, names like Apple, names like Microsoft, all the big companies that have been facing currency headwinds the last 3 years. Now they will have some maybe EPS tailwinds. Could be interesting for them. Moving on to the 10-year yield, 10-year and 20-year yields doing absolutely nothing. They came down today, but being very stubborn up here, close to 4.5 on the 10 and very close to 5% on the 20-year yields. You'll need to see some breaks of some major levels, guys. On the 20-year, that means a break of 4.75. And on the 10, that means a break of 4.2 to the downside. Give me the weekly downtrends. Give me the monthly follow-through. And then we can really talk about some interest rate sensitive plays such as the Russell and stuff like that. But as of right now, guys, the bonds just still lagging behind a lot. TLT very slow. So any longs here probably will, right, pay some very good profits, but it's going to be a long-term time horizon for that, probably into 2026. Moving on to gold. Gold actually had a very nice day today, 1.4%. And we were kind of commenting that the bias on gold was always bullish. Why? Well, the weekly bulls never lost the timeframes, right? Very nice weekly higher lows have been set. We were looking for the follow through into the all-time highs. Maybe we get it, but now entering position is somewhat late. We were commenting a bunch of times last week that the entries were in this area, daily higher lows in the context of a nice weekly push, and the stop loss would have been down below here. Why? Because if you lost that area, well, sadly, that trade thesis is completely unwound, and you might just be going for monthly consolidation. As of right now, no signs of monthly consolidation. The trade entry right now is a little bit late. Matter of fact, that those of you that entered this trade in the 3,300 range, your take profit is coming up very shortly, roughly at 3,450, let's call it first stop, and then 3,500 all-time high psychological range. So the trade is moving well. Congratulations for all of you that were able to kind of get into this one. But gold, no red flags as of yet. And now lastly, moving to Bitcoin. So Bitcoin doing a whole lot of nothing over the course of the weekend. That being said, the higher low is right here, 116 roughly. Let's call it 115.8 if you really want to be specific. If you see a loss of that level, daily downtrend is underway and you're just embarking on a bit of weekly consolidation. High lows now 99,000. Let's call it 98.6 if you really want to be precise. Who's in control? Well, obviously the bulls, right? Very nice weekly trend breakout right now, looking for a higher low. And the likely area of backtest would be 111 down to 109, which was your previous all-time high area of resistance. Now, maybe just using it as a backtest for your longer term bulls. everything looking not too bad on the Bitcoin chart overall. And of course, while Bitcoin, Bitcoin moves first and then consolidates, and then what moves second? Well, all the other names, right? Ethereum rallying. This is actually a take profit level, 39 and down to 37, decent area. If you've been in from here, or rather from here, you remember me, I started a position down here on Ethereum way back in the tariff lows. Take profit area for me right now, and several other names such as Solana and stuff like that. Also, you can make an argument that are coming into, take profit territory, not for the entire trade, but this is when you might want to take some profits off the table for a lot of these altcoins that have been running very hard since the Bitcoin breakout a few weeks ago. That being said, that is everything I had for you guys for the overall market rundown. Now let's dive directly into our big tech list, shall we? All right, so taking a look at Apple first. Apple 0.62% to the upside, however, still getting rejected at resistance. The bulls trying to make a push. This indeed was a bull flag, as we were noticing. Why do we have that impression? Well, because the weekly bulls have been trying to push, trying to set the higher lows, trying to go for it. But sadly today, making a push into the area, once again getting rejected by a few things. Number one, resistance, 221 down to 213. And number two, this infamous 200-day EMA. It's been a very solid area of support prior for the bulls, support, and ever since has been a very challenging area of resistance. I don't know if Apple's going to be able to break out of this range before earnings next week, but we'll have a look at it, right? One thing is for sure though, if we start to revisit some of the lows, I'll be a big fan of writing some put options down here in the lower 200 range. As of right now, the stock is not looking too bad leading into earnings. We do have a bullish leaning bias just due to the fact that Apple has been trailing behind, well, the rest of its sector peers by a considerable margin, right? Down 15% still year to date, but nice to see they're trying to get a bit of a push together here. If Apple earnings are good, I would not be surprised if we can then claim the level, back test it, and that would be some further entries for some trades. Onto AMD right now, AMD up 0.01%, but in all reality, guys, I mean, it's roughly flat, right? So that being said, daily bulls are in full control. Beautiful push, looking for a new higher low. Let me just change this area to a nice, beautiful green box since now we are above it. And they'll be able to use this as support, talking about 155 down to 145. Not looking too bad, but keep in mind, guys, right? On AMD, we've been overbought conditions now for a while during this push. It oscillates between overbought and not, and it is a fairly significant level. So in the event that you see a bit of a pullback here, we'll just keep in mind a few things, right? The 12 EMA has been a very nice EMA that the bulls have been riding. This is the short-term momentum EMA, yeah? In the event you come back down, the first test will possibly be for some bull support. However, if that then results in a lower high and lower low and you lose the area, just understand what's going to happen here, right? Just don't want anybody to get nervous in the event that we kind of lose some levels here and go down for a bit of a pivot and a downswing. Right? Anything above 133. Just looking for a very casual weekly higher low for further trend continuation. A lot of people think that they might be late on AMD. I've voiced my opinion on that. I don't think we're late at all. 155, we're trading at a 1.33 peg right now at the current price. And the thesis for AMD's expansion in the next 2-3 years is still widely intact, guys. You got phenomenal EPS growth. You have phenomenal revenue growth. And the valuation is even not that commanding at 155. So possibly if we're looking to build further positions, any dips might provide a great opportunity to do that. No swing trades for me on AMD right now at this level. I'll wait for a pullback. If we do pull back in a support, maybe you find me writing some put options down here in the sub 140 range. Moving on to Amazon right now. Amazon trying to clip above resistance. Very strong move from Amazon. Amazon has earnings 31st of July, right? So not looking too bad. Daily uptrend is very well set in motion right now. Any move lower, looking for a higher low. Anything above 222, looking for a higher low for further trend continuation. Why do I always give you guys the higher lows? I always say this stuff. Some people, it just goes over their head. Well, because if you lose it, right, that's a loss of the daily uptrend. It can result in a daily downtrend, and you would always be scouting for weekly consolidation. But understand, if that does happen, you need to zoom out, right? If you're unsure what's happening, just zoom out. The weekly bulls are in full control, and any move lower, looking for a weekly higher low. Anything above 207 on any extended pullback. Let's say we do not clear resistance, looking for a pullback for a possible higher low. You will find me selling some put options on Amazon down here. No swing trades from me on Amazon. I have bought all the shares that I needed to during the tariff lows, and I really stopped buying around the low 200s, right? Even my leap call options were purchased here. So I'm not buying anything more right now. The next trading range for Amazon is if you get a nice break above and a back test. Well, then we can set a stop loss below the, well, at that point it'll be support and go for some further longs, right? But I'm not the biggest fan of just buying something here because we feel that we're missing out, especially not for a trade. Moving on to Google right now. Google 2.8% to the upside. They have earnings on Wednesday. So no matter what I say in today's video in terms of price action, everything can change come Wednesday. Take a look at the expected move for Google. It's going to be a wide one. It's about 5% up or down, right? So let's just say Google stays here until Wednesday. 5% to the downside would put you right down there towards the daily higher low at 181. The bulls are in full control of this uptrend right now, trying to crack through resistance, which stops here at 191. That's all these guys from the prior all-time highs. It's all these guys as well from prior support, and has been somewhat of an area of, congestion for Google recently. That being said, 5% to the upside, guys, and very rapidly, you will find yourself very close to new all-time highs and in around that 200 region. That being said, Google, I've talked about it so much here, right? I positioned for my leap call contracts down there. We're up a lot of money right now. Google at 190 is arguably still a buy. We did the analysis again at 180. The valuation is still under a 20 forward price to earnings, still a very attractive PEG ratio, and not a bad free cash yield either. I think it is still one of your best risk to reward plays in all of big tech right now. But of course, you're somewhat later than me, but not late to the game as a whole if you are a firm believer in this company. Moving on to Meta right now. Meta up 1.23%. Decent day for them, reacting from our area of congestion right here, which was support 702 down to 677. Daily downtrend. So we're going to be looking for the bulls to maybe make a bit of a push, get the daily uptrend back. I don't know if they can do all that, though, before their earnings, which is Wednesday, the 30th of July. I think Meta should have some pretty decent earnings. They've been having fantastic profit margins. The only reason that, well, let me just do the chart analysis, then I'll tell you. Weekly uptrend is fine. Looking for a weekly higher low, anything above 676. Meta for me is still a decent nibble in the lower 700s. It's not a full-on, full-size position buy. I think they'll be doing very well for the next 2-3 years. The reason that it's been declining here for the past 2 weeks or something like that, Mark Zuckerberg has just been talking about costs and costs and costs. The other week, he was talking about hundreds of billions of dollars of expansion and capex into new data centers. And also the week prior to that, he was talking about paying new employees to his AI division over $100 million each in signing bonuses. So of course, Meta's had a history with, bad press from Mark Zuckerberg spending too much money. So now we're getting a little bit of a revisit of that narrative, but nothing that Meta can't afford at the current time. The profit margins are fantastic. Free cash flows were fantastic. I'm looking forward to their earnings. It's a nibble for me at the current level. On to Microsoft right now. Microsoft actually flat today, but the bulls still in full control of this chart, and they have earnings Wednesday, the 30th of July. I've commented on this a few times, guys. Kind of like Netflix, right? It's going to be very hard for Microsoft to pop 5-10% after earnings unless the numbers are ridiculous. Why? Well, just because they ran so much since last quarter earnings, 40+% to be exact. Phenomenal rally from Microsoft, arguably one of the best the company has ever had in terms of, successive weeks of green. And now we're in overbought conditions on the weekly, and the daily has been oscillating in overbought conditions for the past 2 months. So maybe you know what to expect. If Netflix earnings are anything to go by, well, even if Microsoft's numbers are good, if they're not exceptionally fantastic to where they beat all expectations and raise guidance above expectations, maybe that'll be the cue for Microsoft to take a bit of a breather. But as of right now, the bulls are in full control. Beautiful uptrend right now. Any move lower looking for a higher low, anything above 497, higher low for possible further trend continuation. I know. Possible, right? Now, moving on further, if we have a daily downtrend, if we lose this after earnings, same thing as Netflix. You're just going to be looking for a weekly higher low, and the bulls have tons of space. Anything above 355, looking for a higher low. Maybe the 12 EMA around 480, and maybe this backtest level right there, talking about 470. Those would be likely areas of consolidation if Microsoft takes a few weeks to go into a healthy pullback. I'm not buying any more Microsoft up here. I did that a lot over the course of last year at this support. We talked about it so much on the channel through 2024. I bought more Microsoft down here during the tariff sell-off. Now I'm full and I'm just riding gains. I'm not selling anything, but Microsoft is a hold for me. Moving on to Netflix right now. Netflix, talking about exactly what Microsoft might be going through soon. We'll see, right? Daily downtrend still underway right now, reacting from support 1217 down to 1185. That being said, if the bulls can react nicely from here, get a nice engulfing move, you want to challenge 1275. If you can give me a daily uptrend reset, that would mean that your weekly low is set And you might just be looking for a little bit more, even on Netflix, coming beautifully down to the 12 EMA though, right? And the higher lows right now are set at 1181. If you lose 1181, it's not looking the best. You run the risk of a possible weekly downtrend and possible further monthly consolidation, at which point I would be a buyer of Netflix if it can come back down and pick me up at 1100. If not, it's just a hold for me, right? I bought the last Netflix shares. Well, I've been buying Netflix for years, but the last ones I bought was in around the $800 range. Moving on to NVIDIA right now. NVIDIA down about 0.6%, but still very healthy, guys. Nothing to really see here, right? Beautiful daily uptrend expansion. Any move lower looking for a higher low. Anything above 151 looking for a higher low, possibly in around the 12 EMA, which they've been riding now for the better part of the last 3 months. Overbought conditions for sure. So just pay attention, guys, right? Watch the 12 EMA and also watch for a daily downtrend. If you see them get a daily downtrend and flush the 12, which they haven't lost for 3 months, it has to be notable to you. Something has changed. And when that happens, you might just be looking for weekly consolidation. Into where, you might ask? Good question. Maybe all the way down here, roughly 150 down to 144. I know it seems like a long distance away, but that's the closest area that we have to possibly elicit some short put transactions from me, or maybe some possible further buy orders as well. At 170, we did the valuation last week, 39 forward price to earnings, 1.7 peg. I mean, it's not crazy, but it's also not as cheap as it was, you know, down here, sub 130, whereas the last time that I was initiating some buy trades on NVIDIA. Moving on to Tesla right now, Tesla down about 0.35%, but none of this matters, guys. They have earnings coming up on Wednesday, and Tesla's going to be a big move overall. Take a look here. Moves on Tesla, usually quite spicy. Tesla's going to move about 6.25. I wouldn't be surprised if it's actually going to move more than that. 6.25, though, is the expectation. We know that Tesla has been trapped in this weekly range of consolidation between resistance 360 to 340 and down below support 300 down to 260. So rather than trying to predict what's going to happen, I'll just give you the expectations based on the expected move. 6% from here to the upside, you may be able to test the top end of resistance. We'll see if they can break through. And if earnings are not well received, we're coming right back down into support, at which point we might be able to revisit possibly some swing trade longs, depending on, how oversold it gets after those earnings. The focus for Tesla this quarter is going to be on net margins, free cash flow, and earnings per share, in light of the fact that we have lost some regulatory credits from other manufacturers, and we've also lost the $7,500 EV credit. So guidance surrounding that is going to be front and center. The energy business is going to do fine. Elon's probably going to still be very bullish on the long-term robotics aspect, the long-term robotaxi aspect of the business. That's for sure. But if the numbers are too negative for the car business, maybe that just overshadows the positivity from your long-term thesis. Moving on to Palantir right now. Palantir down about 1.13%. Not the worst day for Palantir, but I mean, guys, like in the last 2-3 weeks, how much are we up, right? 20%. Bit of a consolidation, never hurt anybody. Beautiful upswing right there, looking for a higher low, anything above 128.5. Higher low for possible further trend continuation, maybe pulling back into prior highs right there and the 12 EMA. In the event you pull back too much, though, you open up the door for a daily downtrend, which would just be resulting in possible weekly consolidation. Good thing the bulls have tons of space. Anything above 128.50. Higher low, maybe for some weekly further progression. Palantir not with earnings until the 4th of August, roughly, I believe. 4th of August. And you guys know my my thoughts on Palantir, right? I think it's a fantastic company, but the stock price is quite expensive right now, right? So initiating new longs up here, somewhat of a risky proposition, unless you have a 5+ year timeline, right? If you're just looking for short-term swing gains, a little bit risky, not the way I do things. Moving on to SOFI right now, SOFI down 3%. Unfortunately, not able to clip more into our resistance range, 22.5 up to 24.5. That's going to be your prior highs from 2021. So bit of a rejection up there, and the bulls just taking a bit of a breather. Been a fantastic run. We were commenting on the fact that it was very overbought last week, and that this was a possible nice area to be writing some covered calls or take some profit off of swing trades that were built down in the lower 12-13 area. That being said, anything above 1730 on a pullback, looking for a daily higher low for possible further trend continuation. Pull back too much, though, just use the fibs, right? Anything above 50% is too much of a pullback. You pull back more than 50% of a move, well, unfortunately, the momentum switches and you open up the door for something like this, and you open up the door for a bit of weekly consolidation, which would be very healthy in my opinion. Anything above 1288. Just looking for a weekly higher low for maybe further trend continuation later on into the year. If we do pull back a bit more, you will see me sell some put options down here you know, 19, 18, 17 bucks as low as I can possibly get in the most recent range that we just pulled out of, and in line with the 12 EMA on the weekly time frame at 22 bucks. Is is SOFI still a good deal? Well, 1.42 peg, not that bad overall. Price to sales also not that bad overall. Definitely not as good as a deal as it was back here, of course. But if you're a long-term SOFI bull, $23 billion market cap for the amount of progression that they're seeing in revenue for the next 3 to 5 years, I don't think it's too bad if you have like a 5-year time horizon. If you want to start a position here and build through any declines, I can see SOFI trading at 30 billion, 35 billion sometime in the next, let's call it 2 to 5 year range. I think that's fair for the company. Moving on to Uber right now. Uber up about 0.63%. Uber's just been chilling here. I mean, it was a daily uptrend, but we've lost all the momentum, right? So they're trying desperately to hold on to the support, 92 down about 90. In the event that you flush, though, daily downturn is underway, and you're just going for a bit more of a weekly pullback. The weekly bulls are in control of this chart. Weekly uptrend looking for a higher low, anything above 81 looking for a higher low. For possible further trend continuation, if we pull back in a sharp fashion, like quick and fast, and start testing some of these mid-80s levels, you will see me sell some put options down here, 82 to 80. I'm not saying it's going down there. I'm just saying if we have a sharp pullback and I can see some volatility, I'll sell some put options down there and we'll see what happens. And around the lower 80s is also the next area that I would be interested to perhaps start another swing trade long on Uber and perhaps add some shares to the long-term portfolio. The last time I added was in the 70s during the whole tariff debacle. And I've been an Uber shareholder for quite some years now at this point. Moving on to TSM right now. TSM down about 0.64%. Not too bad, but they've really forfeited all of the earnings gains. We covered them on the channel last week, right, guys? Fantastic earnings, but kind of like Netflix, it's ran an absolute ton since the lows. So even though they had fantastic earnings, just a bit of healthy consolidation in my humble opinion. We're looking for a new daily higher low, anything above 225, looking for that higher low. Maybe for further trend continuation, keep an eye on this 12 EMA. They've been riding this for the better part of the last 3 months. So in the event you engulf this entire rally and set up the daily downtrend and lose the 12 EMA, well, it's going to be like Netflix. You're just looking for weekly consolidation. A likely target, first target would be 220, prior highs right there. 12 EMA should be curling up as well. So please keep that in mind. The larger area, of course, is 210 down to 200. I don't know if we're going to get that low, but if we pull back to area number 1, quick and fast, let's say, right? Well, maybe we can find some short put options close to there. That's something that I'm keeping in mind. And around 245, we did the valuation after earnings. The stock is not trading expensive, right? So I am a big fan of maybe adding some TSM shares on any notable declines back into, let's say, the 220-ish range, 225s. With that being said, guys, that's everything I had for you guys for our major market rundown, big tech list rundown, and everything in between. Hopefully you enjoyed. Now, let's dive into our biggest gainers and losers of the week. And there's some interesting ones here. All right, so let's start off with the biggest losers of the day. So you can see a bunch of nuclear companies here, SoundHound, Symbotic, all companies that have ran a ton in the most recent few weeks. Rocket Lab as well is down a little bit. Why? Well, maybe because the kids found a new toy to play with, which was Open Door today, right? You know, a lot of these stocks are based on momentum. They're based on hype. They're based on short-term price action. A lot of call options in these as well. But here we go. We'll do these one at a time, yeah? So SMR, clearest time frame, in my opinion, is the daily. So the profit target was hit. We were noticing a great opportunity to enter some SMR longs back here, back test of support. And now the $50 price target has officially been reached. We're just looking for a new higher low, anything above 33.5, higher low. And you might want to base some of the price action levels off of your previous back test right there, which should also be the 12 EMA. Now, I'm not participating in SMR, but just watch how it comes down to that level. There may be some swing trade opportunities, but as I said, a bit of an unwind in momentum. The weekly time frame is still looking far. Once again, though, this company and Oklo, they have no revenues for the next few years. So it's entirely based on narratives and momentum. And like I was saying, right, when the guys on Wall Street bets or when Twitter, it's all about sentiment and attention. Attention is what moves these stocks more so than fundamental information, right? When the attention shifts, you kind of have to notice that. Now, these are temporary pullbacks. They could recover tomorrow, or they could just go into a new phase of consolidation. Oklo right here, hitting the prior highs and pulling back a little bit. We're going to be looking for a new higher low, anything above 51, looking for a new higher low for possibly resumption of the trend. If we come back down hard into this area, maybe a juicy opportunity to be selling some short puts with the volatility if it's something that you like, below the whole support range. But the weekly is not looking too bad. Just a bit of an unwind today. Symbotic, same concept, right? I mean, how much has this stock rallied since April? What is this up? Almost 3x to the top? almost, right? Over 3x. Well, 17 to 51, pretty much almost 3x, over 3x. Not looking too bad, guys. Just a healthy day of consolidation, in my opinion. Coming back to the prior resistance highs, 48. We will see. If you engulf too much and start the daily downtrend, you know that weekly consolidation is underway. And at that point, guys, just target this area, right? Fast and sharp consolidation here. Nice opportunity to be selling some short puts if you like these volatile names. Lower 40s is where I would be targeting for some possible short put entries right there. Soundhound also pulling back. Soundhound had a great rally recently, but once again, part of the unwind cycle coming into resistance. We talked about this on Friday. Now that is 14.5 down to 1287. Now embarking on a bit of a downswing. Soundhound, if Soundhound has one or two more big red days, maybe we can find some short put opportunities down here in the lower $10 to $9 range. That is where I would be interested to sell some options, just using the volatility to my advantage. Rocket Lab, same concept. Rocket Lab was on an absolute tear. It was front and center. It had all the mind share, all the attention, now pulling back a little bit. So that being said, keep an eye on this 12 EMA and how we react when we come down into it. A lot of space for the bulls, though. Anything above 33.5, looking for a new higher low, possible further trend continuation. But in the event over the next few days, if you're monitoring it, right, you see a daily downtrend, you see weekly consolidation, the bulls with a lot of space, anything above 25, looking for a new higher low. We will see, is this possibly the consolidation phase for some of the hottest narratives recently? Maybe pivoting into new narratives. That's something that you always have to keep in mind, because all of these companies, even Rocket Lab, does not have much to show in the way of revenues, right? Much until 2027, 2028. So, as people are pending that fundamental expansion, these things move on attention and attention only. That's why I call them momentum plays. That's why I call them hype plays overall. So if you're that type of trader and you're following the momentum, you're following the hype, you're following the narrative, well, maybe you want to pay more attention to other things that are happening right now. We'll talk about that later. MP Materials, same concept. Fantastic, fantastic push. Bit of a short squeeze, bit of a reaction from the Department of Defense contract. So looking, the $400 million contract, pulling back a little bit. It's very tough to know when these are going to stop, guys, right? But everything comes to an end eventually. Maybe just looking for weekly consolidation. Rather than guessing where we pull back to, I would rather wait for the bulls to show us. We've seen that prior on names like Circle, straight up, and I then wait for them to establish some form of a consolidation range before positioning further for some swing trades, rather than trying to guess, okay, here's the pullback. Some people use the fib. Some people say, well, I'll be looking for a pullback to like the 38.2 and I'll fire off a trade there. That's fine, but there's nothing there. Just let them show you where the short-term bottom is, right? Kind of like an SMR did, right? Massive pull up. And then we started moving down softer and softer and softer into a level, and then we can further position. So let them show you where the bottom is rather than trying to guess. Him stock, unfortunately, once again, rejecting from resistance 55 to 51. You can make an argument that this is a bear flag, right? Loss of the weekly uptrend, kind of a bear flag, not that big of a retracement size, right? Take a look at the retracement size here. It was just shy of 50%, not good enough, and not mounting above resistance. Maybe due for a bit of a downswing. If we do, the next area is 41. If we pull back hard, I'll be looking to sell some put options, possibly down here in the mid 30 range. For now, I'm not really doing anything on HIMS. And talking about Elf Beauty, we'll cover a few more of them. Elf Beauty, coming down, same concept, right? The stock has ran an absolute ton since the lows, from the lows to the top right there, 166%. Now just in a phase of weekly consolidation. I've been a big fan of selling some put options into support 105 down to about 89, and I will continue to do so. All the EMAs are there. Prior support is there as well. Just some very healthy consolidation for a lot of these names that have ran a ton. Short-term price action is tough, but if we were trying to build some more swing trade longs, maybe the lower 100s to the high 90s is maybe where you want to do that. Take a look at Robinhood. Robinhood, same concept, right? Unfortunately, being outdone today, outshined, outshone? I don't know. Anyways, you guys know what I mean, right? Bit of a consolidation phase for Robinhood. Anything above 91, looking for a new higher low for further trend continuation. Pay attention to this 12 EMA. 12 EMA is the momentum indicator, guys, right? If you lose it and simultaneously lose the daily uptrend, then you are going into very healthy weekly consolidation. So let them show you what they want to do. But I've been talking about this since we've been at 100, right? I'm not a big fan of buying these highs right there prior to some consolidation. I'll buy some weekly consolidation phases on these stocks, but they cannot run up in a vertical line. Even Palantir, even NVIDIA, when they made their moves, right? They did not move up vertically. We did have some vertical moves. Then they consolidated on the weeklies, right? It happened the entire rally up, even on Palantir. Move up, weekly consolidation. Move up, weekly consolidation. So you may as well wait to for a weekly consolidation phase to establish better levels so that you guys get a better idea of how to swing trade these with a defined stop loss rather than just buying highs and crossing your fingers. And that's, I mean, there's so many more, but I'll save you that, right? We went over the big ones. I wanted to talk about momentum today. There's obviously so many more that we can talk about, but there's just not that much time left in the video, yeah? Moving on to the upside here, open door. So open door is a very simple thesis. I'll explain the thesis, right? It's a Wall Street bets play, of course. Meme stock. The stock was kind of left for dead over the past few years. Open door was a disaster. They bought a ton of homes over. It's a house flipping company, in essence, right? They bought a ton of homes here with a lot of investor money. The prior management team had arguably no idea what they were doing, buying homes above market value, not able to renovate them really well. And then, you know what's funny is a lot of people who sold their homes to Open Door, they would actually go back on Reddit and say, you know what? These guys bought this home from me for X, let's say 500K. And they put a bunch of work into it, 50, 60 grand, and now they're selling it for 480. A lot of the homes that they were trying to sell was at a loss, and the management team prior had no idea what they're doing. They now have a new and rejuvenated management team for the most part, and a better business model. Now they actually understand how to buy homes cheap, under market value, renovate them properly, and do their due diligence properly on their various market segments, which has led certain people on Wall Street Bets to derive a thesis here. Prior, when the trade was there, got a lot of interest back here under $1. And now the thesis is trying to play out as we move closer to rate cuts, as the housing market might start to get a little bit more interesting leading into 2026. Well, obviously, the trade has now been front ran, a lot more participation, a lot of call options, a lot of short interest on this one as well. You're seeing a squeeze, you're seeing a lot of call option buying, etc., etc., etc. My take on this, guys, only put into it whatever you want to lose, right? This is not a full send, full YOLO play. None of them are for me, but putting in maybe whatever you're able to lose, right? $500, $1,000, $2,000, $3,000. That's up to you, depending on the size of your portfolio. It can definitely squeeze more. They have the fundamentals to do it. I've actually checked the fundamentals myself. They're not looking too bad. They've got rid of a lot of their bad deals on their balance sheet. They're not looking too bad in terms of their balance sheet. They do have some capital, but I would expect the company to possibly issue some shares, kind of like GameStop did. Whenever these companies that have been down for so long, that are running a little bit thin on financing, whenever they see a very fast, rapid appreciation in their share price, that's when you tend to see a little bit of a dilution event. So if that event gets announced, well, you may see a bit of a decline here, but the momentum is very clear, right? You can't really say that you're late. This one can squeeze a little bit more, right? So the way that I'm playing it, I'll show you guys. I'm just selling puts. And if I get assigned on some shares, I'll just ride the shares, right? But I'm not going to buy the top of an 80% move. I waited. We got a nice decline into the end of the day right there. I sold some puts at $3. If I get assigned by Friday, I'll just keep the shares and I'll ride the momentum as well. Still somewhat early in the grand scheme of how much these plays can squeeze. But like I said, just don't overdo it, right? Moving on to ALAB right now. ALAB, not too bad. We were commenting on the fact that this was a beautiful, beautiful breakout swing trade attempt. Stop loss would have been below the lows, and the target that you would be going for now was up here around 132. It's almost there. So congratulations to all of you that were paying attention to this one on the channel. A few members in my Discord smashed this one out of the park as well. Looking very good. Up end of the continuation should be 130 up to about $140. Looking very solid there. Sentinel One got put through the ringer today. Beautiful push on Sentinel One early morning, and then there was a rumor that Palo Alto Networks was possibly in talks to acquire them. It made them push another 8%. They were already up like 9% on the morning, then another 8% throughout the afternoon. That proved to only be a rumor, so sadly the trade got unwound right there. 22 down at $20. Not the that's an area of resistance, of course. Any pullbacks, not a bad opportunity, guys, to be positioning for Sentinel One. Sentinel One, although it's a company similar to most other stocks in the cybersecurity landscape, guys, they're not at a profit yet because they're not scaled properly, but their revenue prospects for growth do look quite attractive. I'm actually surprised nobody has sought to acquire them sooner, such as Microsoft or Google or Amazon, or even some of the other bigger cybersecurity players. They're ramping revenue fairly well, like 20% per year. Their EPS curling to positive. And when I see EPS curling to positive, that's when I get more interested in a stock. Not a bad risk to reward trade-off in my humble opinion, guys. If you're looking for a bit of upside, I mean, if we're positioning here with a monthly outlook with a bit of a longer term time frame, stop would go below here. $5 stop loss. Take profit number one is 28. So like that's roughly a 2-to-1 trade. And then you kind of leave some runners thereafter to see what happens, right? Sentinel-1, not a bad proposition overall. Rocket Mortgage, I mean, I've been talking about this one for so long. Finally starting to get a little bit of love right here. They've acquired Redfin. They've acquired as well Mr. Coop Mortgages. They're basically just establishing their dominance over the online mortgage space. They really want to be the go-to player. Weekly uptrend is very clear right now, looking for some follow-through. Very nice. You're into the first area of resistance. And beyond that, there's not much until like 19, 20 bucks, guys. You know me, I have some calls. I'll show them to you very shortly. You're not late, okay? Right? You're not really late. You're not as early as maybe someone like me is, but we're going for the monthly expansion. It's a thematic trade, right? This is like a multi-quarter trade into 2026, rate cuts, right? Rekindling of the real estate market on all those keywords. Moving on to XYZ, this is the last one we're going to do. XYZ right here, including in the S&P 500. So XYZ inclusion in the S&P 500. You know my thoughts on XYZ, guys. Jack Dorsey has, for lack of a better word, he's mismanaged the heck out of this company. Kind of forgot the reason that the company was, made in the first place. He's pivoting the company more to a blockchain-oriented thing rather than trying to grow the Cash App business. Cash App business has been flat in terms of revenue growth for the last like 5-6 quarters. Their merchant terminal solution, point of sale terminal, has been flat as well for the past 5-6 quarters. It got included in the S&P 500. It's not that bad. It's a fairly cheap bet as well, but not my favorite. Not my favorite, let's just say fintech stock in the game. There can be some appreciation right here, of course. I talk about it every quarter. It's not my favorite company. You guys remember I played calls here and we smashed it. We were up like 3-4x on those calls. We smashed it. Not a bad proposition. You're a little bit late buying into resistance, but let's just say any declines here. It's not bad if you have a multi-year outlook. It's going to be a case of rising tides lift all ships. Unless they can turn around their growth on the Cash App business and their merchant terminal solutions business, it's going to take a while to actually turn this one around. It's not the worst company to play, in my opinion, but it's also not a highlight of something that I look for on a regular basis. So that's all the ones that I kind of wanted to cover for you guys today. Hopefully you guys were able to, appreciate certain segments of this video. If you were, consider dropping a like. Oh, sorry. We got to do the portfolio first. My bad. I'm sorry. Okay, so if you take a look at the portfolio real quick, in terms of the trades that we did today, a few new wheel trades. So a lot of these were from the top 5 options play. One was CoreWeave. We got into this one last Friday, 105 strike for 73 cents. Close it off this morning for 25 cents on the pop, 65% in a day. I'll take that rather than staying in Friday. I keep telling you guys how I play CoreWeave, right? I just wait for the big red days and then sell puts way under the market. And it's been a very profitable endeavor so far. Moving on to the further trades here. Chewy was a trade on the top 5 options list yesterday. 37 puts for 18 cents. We'll see what happens. That trade is into support, as I was describing into yesterday's video. Not too bad. I like this company. Only one contract. Going to start off small. Micron was also a trade at the very end of the day. Was waiting for this one all day. 108 strike for 51 cents. Micron has been a play that I've been wanting to, do again, basically in the lower 100 range. So I'll start one there at 108. We'll see if we get assigned by Friday. It's below the expected move. This one was also in the top 5 options plays. Very easy, right? Just looking for a weekly high or low. I don't know if it's going to be 108, 107, 106, 105. All I do know is that I don't mind playing it in this level right there. We also had several lottery plays in terms of earnings, because you guys know I like doing that sometimes. So I'll go run you through the earnings plays. We took a CMG, Chipotle, earnings lottery play, 46.5 strike for 16 cents. We'll see what happens. 2 standard deviations away, as I always do. Fiserv, we got a couple plays here. Call debit spread, October, 180 to 185 for $1.30. And another earnings play, talking about the 146 strike for 38 cents, which is also a 2 standard deviation move from the expected move. So Fiserv, solid company, very solid company, and at a very good valuation. It has earnings on Wednesday. The call debit spread is to benefit from any upside, but if it doesn't happen, I have until October for it to happen, and I also bet very small, right? I do play earnings, but when I play earnings, I'm playing very small. The short put, very simply, guys, is the bottom end of support back here from 2024 and the 200 weekly EMA, which is a nice fallback area. It always has been a nice fallback area for the stock. So to be honest with you, I wouldn't even mind being assigned here and playing the wheel on it. It's pretty good in terms of valuation. We did it at 165. It's a one peg. I mean, I'll take that, especially a company of that nature doing really well. Stable coin deals with MasterCard, with Coinbase as well, with Circle too. So it's looking pretty good, guys, in terms of FISERV. In terms of the other trades I took today, Open Door, Pure Lotto, right? In parenthesis, meme, $3 puts for Friday. I only did 2 contracts, guys. I'll start it off slow. Maybe I'm willing to go up to like $1,000 or something like that, right? So we're starting off slow, $3 puts for 36 cents, 10% premium, which was insane, right? So my average cost, if assigned, will be just, you know, let's call it like what, like 265 or something like that. So I'll start off a little position there. If it drops further, I'll kind of build into it, then just hold some shares and see what happens. See if the Wall Street bet gains can bless us as well, even though we're slightly late to the action here, but that's fine. Whenever I take these bets, I take them really, really, really slow. So that's all the plays that I added to the portfolio today. If you want to see the portfolio, I mean, it hasn't really changed since Friday. We had a nice green day today. In the portfolio, nothing much has changed. If you want a full portfolio breakdown, just look at Friday's video. Nothing else has changed. We saw some nice gains on Amazon and Google today, but some of the other stocks some of the other plays that were green today ended up pivoting to the red by the end of the day, but it's fine. Here you can see all the open trades that I have, the Chewies, the CMGs, the Elfs, the Elf Beauty. Sorry, I didn't show you the Elf Beauty. Elf Beauty 105s. For 54 cents. We got that very early this morning. This is another wheel trade. Talked about it yesterday in the top 5 options plays. Just looking to play the pullback and a support for Elf Beauty. So, you know, nothing too complicated here. I went through all these positions on Friday. If you want a further breakdown, you can go into Friday, but we didn't really close anything other than the core weave. We just added a ton of new wheel trades, and I have a ton of buying power leading into the rest of the week. So we'll see what we get. Next portfolio update will be on Friday. So guys, that's it for today's video. If you enjoyed, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We'd love to have you back. We do these every Monday to Friday after the close. Lastly, if you have any questions, always feel free to leave them down below in the comment section. Love reading and answering your guys' questions. And lastly, if you guys wanted to participate in our trading and investing community with almost 200 other members that trade the markets every day, but also build very consistent long-term portfolios. I'm a big fan of building both portfolios. You may consider joining our trading community. In the community, you get access to all of my trades in real time. Here's just some of the trades that we've made over the course of the past, I don't know how much I'm scrolling here, 2 months or something like that. The green little check marks are wins, the red little circles are losses. You get access to all of them, whether they're the wheel trades, the lottery plays that I do sometimes, the directional trades like call debit spreads, leap calls, swing trades with shares. You get access to all of them. You get access to our private morning live streams Monday through Friday. I live stream for about 2-3 hours at the open where I trade live, but also take all your questions on your stocks, your options, your long-term portfolios. If you're not there, they're always recorded. You can also ask me your questions in our chat rooms throughout the day. You get access to our educational section, the private videos, where I go through many different styles of trading strategies, many different option strategies, technical analysis, fundamental analysis, how to grow small, medium, large accounts, depending on, you know, the allocation that the account should have for a trading account overall, how to construct long-term portfolios, a whole bunch of educational videos that I don't talk about so much on YouTube. And last but not least, you get access to all my charts. Whenever you see some technical analysis like this, resistance, support levels, you can just copy paste my charts, and it comes with all the fundamentals that I do once a quarter on over 200 names. And you also get access to all my watch lists, all the watch lists that I use to find all these plays. You can just copy paste all of those. It takes like 10 seconds and they are yours. Just an added benefit for our members. If any of that sounds good to you, I'll remind you the link to access the Discord is in the video description. And hopefully I see you in there soon. And if not, I'll see you right back here on the channel, guys. That's it for me. Have a good Tuesday session. See you guys tomorrow after the close. Take care and peace.